The upcoming winter, or rather the heating season that comes with a burgeoning energy consumption, is in the spotlight again. However, despite expectations of another drawdown in the U.S. crude oil inventories, yesterday, the American Petroleum Institute reported an unexpected increase in its stocks. Against this background, oil prices managed to stay above $92 per barrel. Brent crude just touched that level but then bounced off it and gained strong upside momentum. As a result, the benchmark advanced almost to $95 per barrel, thereby getting out of the recently formed trading range. If the price consolidated above the 95 mark, the asset will likely extend gains, hitting another local high. Meanwhile, gold is suffering heavy losses, and the yellow metal has already dipped below $1,900 per troy ounce, thus drifting into oversold territory. Thus, one should expect a rebound to at least $1,910 per troy ounce. A drop in the gold prices is a bit surprising. After all, the European Central Bank signaled yesterday that interest rate cuts could start in the second quarter of next year. Apparently, this decline is purely speculative due to capital flows from the euro to the US dollar, which in turn puts pressure on the metal. The ruble remained stable. However, shortly after the closing bell, volatility increased sharply, with the dollar fluctuating between 94 and 98 rubles in the interbank market. From a technical point of view, we are witnessing the accumulation process, which could trigger new speculative moves. As before, the key signal levels are 97.5 in a bull case scenario and 95 in a bear case scenario. Such a surge in trading activity in the currency market hints at a growing anxiety ahead of the release of a macroeconomic data, which is likely to be downbeat. Thus, the unemployment rate is expected to rise to 3.1% from 3%, and retail sales are estimated to increase by 10.2%, following a 10.5% jump a month ago. Industrial output growth is forecasted to slow down to 4.6% from 4.9%. All this may be perceived as the devastating effect of the Russian central bank's monetary policy on the economy. Against this background, the ruble may lose ground. Nevertheless, the macroeconomic situation in Russia looks much better than that in other countries, including developed ones. The rest of the world may be edging toward a global recession. And that's all for now. We continue to follow developments in the financial markets. Subscribe to the channel and follow the news with us, and see you soon.